Why the fuck? Alright. Yo, what is good, everybody? Good morning or good afternoon. It's your boy Wolf. And I'm just going to be doing trade recaps or answering questions from the comments or the chat. So just shoot whatever you got at me. I'm just going to wait for people to go ahead and join up for a bit. The stream is only going to be on till about 9:50. It is a 30-minute stream, 40-minute stream. Really just depends on what questions we're going at. So let me know what you guys got. How many people we at right now? So we got 2 viewers. Alright. That's not bad. Not gonna lie. Pretty low considering the sub count. But we're chilling. We're chilling. I'm gonna just be on Discord for a bit while it fills up. I would get music on, but like I said, I want to answer questions, so I just want to be able to make sure you guys are able to hear me. If you guys hear any random fucking tickers going off in the background, just know that's a scanner. You guys could just ignore that.
Shop.
There it goes off again. Shop at 110.12. Entry was 983 for me. That was my confirmation level.
Shop. 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 Shop.
Damn, shop's going off. 10:13, now at 10:30, now at 10:55.
Shop. Shop. Shop.
Oh shit, the chat is disabled for the live stream. I think I know why, but I don't know if it's gonna make it fix that. Let's try this. Alright, there you go. Alright, chat's working now. Sorry about that. Just had to fix it, some of the settings. Alright, so since there's only a few people and there's nobody asking questions, I'm just going to go ahead and do a quick trade recap on Shop and why I decided to take this trade and get calls where I did. So this is Roku, first of all. Shop at 10.15, now at 10.85. Could have diamond handed this for another $400. But pretty happy with the profits. Would have been a nice $600 play though. So this is the 15-minute that I'm looking at right here. And what am I trying to find? There we go.
Shop.
Yeah, it does work, right? Okay, cool. Alright, sweet. So this is a 15-minute. The reason I'm on 15-minute is because it's about, when I got into the play, it was around maybe nearly 2 hours into the trading day. And at this point, this is where we see lunchtime, and, you know, East Coast, Wall Street's taking their lunch breaks, and volume overall just dies down, and it's just, you get weak confirmations. So the reason I like to wait for the 15-minute candle is because it really helps avoiding out those fake 5-minute breakout confirmations where, you know, you get the candle that opens below resistance and then closes above it. Let me actually just go ahead and mute this bot really quick. Okay, sweet. Sorry about that. So like I was saying, on the 5 minute, you're gonna find a lot of fake breakouts. Sometimes once you like about if you're waking up late, about 2 hours into the day, and you're trying to wait for that confirmation, about 8 out of 10 times that first 5 minute candle is gonna be a fake out. I'm gonna go ahead and show you an example right here. I think I could get an example off of Piton. I could be wrong, but we'll see. No example. Oh wait, this is 15 minutes. All right. Nope, no fake out on here. All right, I'm not gonna really take the time to look for a fake out, but basically to go off of what I said, usually what you'll see is something that happens like this, but this candle right here will normally be the one that breaks our resistance, and then we'll see this dip like that and a continued downtrend. So that's why I like to look at the 15 minute about halfway throughout the day, just so I could get that. I'm really looking at one candle, but realistically, as a day trader, we're looking at the 5 minutes. So I know within that I have 3 candles. So it's just basically me having insurance on my entry. That's why I waited on the 15 minute. Now, for why I got calls is because I just marked my resistance for the high of day. Normally, I like to wake up, get my pre-market high, pre-market low. It's really early in the day. I like to just mark the current, most recent high of day and most recent low of day. So right now, the low of day is sitting at 958.35. Now, the reason I didn't buy puts is because, truth be told, I wasn't even looking at puts. I wasn't even looking at shop yet until we were about right here. And at this point, I'm just playing the ascending triangle. I have my trend line support. I'm making my higher lows, 1 high low, 2 high low, 3 high low. That's usually where you want to get your entries on the 3rd high low. You want to wait for that confirmed breakout, which for me was above 983. And the reason I did get 983, as I said before, it's the high of day. It's our resistance for the day, our intraday resistance. And it's just a level I know that is relevant where we have selling pressure. So I need buyers to step up and break out through it. And that's the whole process behind the shot play and why I decided to get calls. Now, as far as the target goes, my price target was 1026 originally based off of a 4-hour resistance, I want to say. But you can see it on the 15 minute right here as well, which I believe at some point, okay, here it is. So it used to be a resistance, so I'm expecting it to be treated as a resistance still, considering that we did break out a few times and trade above it, but it's not something that lasted nor continued. And that's the shot play. Bought in at 515, currently sitting at 11.0 for $1,100. That's looking at a $600 profit. Hit a high of 1260 from this pump on this candle, which is a total profit of $745 if you manage to diamond hand to the price target of 1016.98. If you use TradingView, then you can simply just get these price targets by going on your left toolbar. Going to be the 7th one down. It's going to be called long position. You could get short position, but basically it sets stop loss and price targets for you. You want your risk reward ratio to be no higher than 2, which then again is a big move and it's still really risky. But you could always make your stop loss tighter while keeping that higher reward ratio and low risk ratio. So this is a tool I really like, especially when we're going into new highs or just breaking through support levels left and right. I like to just, mark them to get new lows every time. So let's see. Questions you guys might have. So since I'm done with the shot play and rope, I'm done trading basically. I've been trading for about, I want to say I started trading around 8-ish, 8 a.m. and I just finished around 9. So about a day, an hour a day. My average trading time. So one trade I have not alerted just because I don't want to spark up a lot of controversy is SPY calls going into October 23rd. You're more than welcome to ask me why, or just take them, but it's not gonna be an official alert I'm giving out. You guys aren't gonna see in the Slap Stocks group just because it's more of a personal trade I'm taking, and it's more off of logistics, numbers, historical events, you know, all that fun stuff that's not technical analysis. And I know a lot of you guys aren't really comfortable with that. But alright, so the reason I did get SPY calls is because there's this book, you guys can buy it on Amazon, it's pretty cheap. But basically it's by this, it's called, fuck, let me get it. Give me one sec, fellas. Alright, so the book is called Charting and Technical Analysis, #1 Charting Manual for Investors by Fred McAllen. You guys could buy it on Amazon or your local books, Barnes & Nobles, I'm pretty sure. But basically he goes over this thing called the Dow Theory, and there's multiple things to it. One of the things is changes in volume, but the biggest thing for me that I found really useful, let's see, where is it at? If I could find it, I could actually just show you guys super quick, but not look like that's going to be the case. Or maybe it's not this book. Maybe it's this one. I think day trade for a living. Yeah. Okay. Well, I can't find it. It's what I'm pretty sure it's the Charting Technical Analysis by Fred McAllen. But basically, it goes over this thing where he mentions that the stock market goes through 4 phases every time. And basically, the way it looks is you have your first phase going up, and then you have your second phase going down, and then you have your your third phase going up, and then your fourth phase going all the way down. Not completely down, but you do reach some lows. And part of this Dow theory is that every time the stock is really far away from the 200 SMA, which is this one I have right here, normally you'll see a 30% to 50% pullback from its most recent high, which is about halfway from its high to its 200 SMA, if you really want to just try and eyeball it. But basically, during what this phase is, the way it works is, I'll go ahead and show you an example. So if we're going to go ahead and consider this phase 1, this would be phase 1 from here to here, my first leg. Now my second leg would be from here to down here, this first dip. And then this would give me phase 3. And then this will give me phase 4. Now the reason I didn't consider these dips is because realistically, you could draw a trend line for these to hold that support bounce. So that's why I didn't consider those dips part of that phase. So you have your first dip, or hold on, give me one sec. Just want to make sure I can highlight it for you guys. You have your first phase right here, and then from phase 1 to phase 2, it's right here. So phase 3 starts right here, and then we have our fourth phase. Now from here, going down to here, we restart the next phase session, if you want to call it that. So from here, we have phase 1, phase 2, phase 3. Whoops, that got messy. So phase 1, phase 2, phase 3, and then phase 4 right now. So basically what I'm trying to get at, or really hypothesizing or trying to calculate, is us going into our next phase session, starting phase 1 off right here at 324 as a low. If I'm going off technical analysis based off of the support that we have right here around this area, along with this one that was treated as a resistance previously, even before the whole market crash, it was a pretty solid resistance and support that you can see right here. So I'm gonna go ahead and actually clear this up really quick, just so I could draw this out. There you go. So what I'm getting at with part of that whole phase session is that basically you could say speculating that we just finished another phase session where we completed the 4 phases and that we're going into phase 1. Now the second thing that I have to back that up would be the 200 SMA pullback thing I told you about. Every time we go in a nice long leg up or a nice rally, naturally naturally bulls are going to get exhausted. You're going to have your sell off. Now normally we want that. As long investors, we want pullbacks to happen, which normally could range anywhere from 10, 15, 30, 50%. Normally we're looking at around 30% or just small pullbacks to really strong levels, which for us would be from 360, nearly 360 all the way down to 320. So to me, that is an incredibly large pullback, but also a healthy one considering the zone we are still able to maintain and really got a good bounce off of. So those are 3 things I'm already putting into consideration. The 4th thing is historically, if you look at last year, you look at the year before, every year around October through January is when we get our slow rally with minor pullbacks in it with consolidation. So if I go back to 2019, here is July, year-end July, start of August. Almost similar to when we started pulling back today. We go all the way through right here, October 4th is when we finally hit the bottom, October 1st, and we start rallying up all the way from October 1st to about February. If I go back to 2018, 2018 was different for some reason. Oh, that's when the elections happened. No, dumbass. 2 years. So 2018, I can't tell you what events because it started in 2019 January, but you could still see a similar rally versus the pullback. And so you have this pullback right here, this top right here, and we pull back for a solid, I think it's like 2 months, 2.5, I want to say. So January to April, 3 months roughly, considering this top was end of January, start of February. Yeah, so roughly 2.5, 3 months, and then we started going up. So that is the reasoning for my SPY calls, is the pullback that we are experiencing right now, knowing that we're going into a new year, and going into a new year about 3 months prior, we tend to just rally up into the new year from these political months, if you want to refer to it as that. Last year it was the trade deal with China, but we also started bleeding in August all the way to, I want to say, mid-November, about 2 weeks prior to us getting the phase 1 deal signed. So, oh, was it interest rates in 2018? I'm not sure. I didn't start trading in 2018. So if that was the event that was happening around then that caused the rally, then most likely. No, so what I'm saying right now is we are not back in phase 2. I'm saying that we're starting a new phase. So we would be, I guess you could consider it phase 1. Well, not you could. I'm considering it that we're starting phase 1, the start of a new phase session. And that's why I got SPY calls for October 23rd. But I also have I bought some SPY calls around 324 for early December. And those are up quite a bit as well. All right, what else you guys got? I mean, honestly, for those who really do take trading seriously and do want to make it a full-time thing or just trade long enough to where they could retire and just be financially free, the best learning advice I could give you is to just keep charting every day and just read new books every day and watch videos. Investopedia.com is a really good website. Buy courses, pay for a mentor. Just basically don't stop learning and don't be so close-minded, even to people who are new to the community. Because the thing about the stock market is that it's huge on psychology. Because you got to think, these investors, they're not all giant whales or Warren Buffetts. About 25% of it now is retail and traders, which would be considered us, and that is a huge amount from what we had last year. So there's a lot of regular people just like us with 9 to 5s who are participating in the stock market, making the same trades we are, or the opposite. So you just got to really be open-minded to learning different perspectives, whether it's new, professional, somebody completely unrelated. I mean, I still ask my friends and family members and just random people like, hey, like, what are your thoughts on the stock market right now, or politics, or environment, or the economy? Because an Uber driver can literally have some really nice insight on the economy, or interest rates, or banks, or anything really going on that you may not have even thought to put into consideration that could really benefit you long term. For me, what ended up helping me was when COVID first started, I was working at Wells Fargo and I noticed a lot of people were talking about their houses, about selling stocks, about interest rates, about buying houses. Basically, worried about another '08 market crisis, well, the housing crisis. And once COVID started recovering, what I started doing is I started looking into stocks. When one of them was Zillow. If you don't know what Zillow is, basically it's not really build a house, but it's a filter for shopping for the perfect home or apartment you want. And my entry was $70, and it's at $101 right now. And this is a stock I bought equity in. The other reason I did buy Zillow, not only because of what was going on, but because of Airbnb. I mean, no one really talked about Airbnb because it's not in the stock market, but Zillow is. And realistically speaking, there's a lot of people who buy homes just to rent them on Airbnb. That's their source of income. So when COVID happened and restricted traveling and people's income capacity, that forced them to list their homes. And Zillow is one of the easiest ways to list a home and get it sold really quick without getting a realtor involved. All that middleman shit. So immediately there's more listings on Zillows, which would be more fees, commissions towards them. And overall, the second thing I noticed was that when we were recovering, the one thing nobody paid attention to is how fast the housing market was recovering. Like there was literally back-to-back headlines for a week straight saying there's a surge in the housing market for a record, and nobody was paying attention to that. And that's what brought my attention to Zillow as well. And that's why I just checked out the chart. It's a clean chart. It's very consistent, strong health, strong growth. And it was just a matter of waiting to see if we were able to push through that 70 resistance. So don't think it's all about technical analysis. Market psychology is a big thing. So is fundamentals, data, logistics, and just overall, you have to really put into consideration that the stock market just doesn't consist of Robinhood Wall Street bet traders. You legit have funds, firms, banks, 401ks. You have fucking normal 9 to 5 people considering of completely closing out their retirement accounts because of things going on in the economy, because they don't like the president, because they don't like the interest rates, they don't like the way the market is rotating sectors. It's a lot of things to learn, and you really got to put into factor what is really outweighing what the most. Are the phases similar to a fib retracement? Yes and no. I mean, you're seeing the same. Ideally, technically you are seeing the same image on a fib retracement. The only thing from fib retracements though is that it's calculated based off of historical pivot points, which is just high lows. So that, and the phases are more like legs where it's a straight rally, we get a nice pullback. It's just bullish channels versus bearish channels. And fib retracements involve consolidation and all that pivot points from the previous high lows. So I mean, I personally don't use pivot fibs for that reason. It personally throws my trades off. So I'll go ahead and do SPY again from the beginning of this year. So let's see. All right, so I said that the reason I started phase 1 right here was right here because last time this is where we ended phase 4. And no, was it? Yeah. So beginning of the year, this is where I started phase 1. And I went phase 1 up to here, down to here for phase 2, up to here for phase 3, down to here for phase 4. So yeah, this was the end of last phase session. Okay. So just to zoom in on that. So the reason I'm not counting these dips right here, the ones before, well, I mean, technically they are in March. They are after March. What dips are you talking about? I didn't include the dips on the way up before March. What dips? Oh, you're talking about these right here. Okay, before the recovery. No, so the reason I didn't count these is because this was from the crash, the start of the crash that happened earlier this year, and this one right here, from February to end of March. That was the end of phase 4, or that was phase 4 right there. So that's the end of that phase. And this is the new phase right now. Yeah. And so I'm saying right now, what I'm expecting is a bounce right here, which would throw us into another phase session, creating the leg for phase 1. I don't know if that makes sense. And the reason I rely on this theory, if you want to call it that, so much is because it's something that has been consistent through all market conditions, historically and present. Anytime. All right, so I got about 8 minutes left. Hold on, 7 minutes left, 8 minutes left. Is there any stocks you guys want me to check out real quick, or any questions you guys have? Is there any strategy to find the highs and lows with this theory? There is, but as far as technical analysis goes, I'm gonna honestly say your best bet for that would be to use pivot points. One of them being pivot point standards. I'll go ahead and show you what that looks like really quick. Give me 1 sec. So one of those would be pivot point standards. I'm just going to go ahead and turn off historical pivot points. Well, actually, I'm going to leave it on. So the way it calculates, it's calculated off of historical price action or pivot high lows for previous pivot points. So you can see right here around April, between April, the entire month of April, it has a resistance or a pivot point or calculation that we could have a move to 492, but that never happened. If you really look at it, you could kind of see how it's been slowly scaling up to each like different pivots. So since, what is this, March 23rd, we've been in an uptrend all the way to September 3rd, and that's when we really started pulling back, and that's when we broke that trend. Yeah, this should be accessible on the channel after class. Any common movement every 4 years during election time? I can't answer that question yet. I really haven't traded the market during election time. This would be my first year. I started beginning of 2019, like literally January 1st. So I haven't experienced the market during election time. This is gonna be my first. But going back to Gorilla's question, so this, you could use this as a strategy, but realistically, the best way to go about it is just looking back at things and moves during the rallies. So I mean, really, I could say that from this move to 294, before we started consolidating, we had a $76 move. Is it? Looks like it. So what I can end up doing is, and I do this too to find my price targets when we're making all-time highs as well, is I grab it from the range from support to resistance. And the reason I'm marking this as a resistance is because we see the consolidation right there happening. And I could just move this from here for the next $76 move. And I could say that if we're able to bounce back from this, I could calculate off of that and say the next resistance should be 370, 372-ish range. So that's one way to calculate next new highs. There's a couple strategies. A lot of them are just based off of ranges and numbers and data, and just trying to calculate the right movement. Normally, my old strategy used to be subtract second resistance from first resistance and divide that by 2. So 76.40 divided by 2 would be 20. My bad. It would be 38. So 38.20. So I'm going to move this to 38.20 as close as I can. Sweet. So since this is 38.20, my resistance is 359. I'm going to move this right here. And so I would be expecting, once we get to our all-time high and break that resistance, my next price target would be 400. From our all-time high, if we leg up, which we should, since I'm considering this to be phase 1, our next real strong resistance that might cause us to go into a pullback, similar to what we're doing right now, right here, would be around the 390. Since it's 398, is it? Yeah, 398. I'm gonna just say 395 to 400 range. So I got time for one more question. Nice. And there's the bounce right there. I'm actually going to go ahead and add my SMA back. shop at? 1012. 189 on Roku. What does that put premiums at? And Python's going off still. 385. Roku premiums are at 270. Only about $50 up. That's not bad. Pretty close to where we trimmed. All right. So I'm gonna be going live actually every Tuesday. And I'm also going to be getting group sessions for T3 and Study Lab going next month. I'm still figuring out the schedule for that, and scheduling for one-on-ones should be available now. Because I believe I put the start date back for October 6th, but I think October 6th, October 7th are already full. But scheduling for one-on-ones should be available now, again with me, and we will be getting some group sessions going, and I'll be dropping in voice chat, I believe every Friday starting October, and we also have a beginner's course for T2 coming out pretty soon as well. I don't know if I was supposed to mention that yet or not, but yeah. So, all right, hold on. Okay, so basically it does rip up though, right, Jordan, from election day into the New Year, basically, along with what I was saying earlier. Nice. So that's able to check out what I said earlier. That's actually good to know. So my December calls are looking good. All right, sweet. I hope you guys found this really beneficial to your learning, or just answered any questions at all. But if you guys ever have any more questions about strategies or theories, just go ahead and shoot me a DM, and I'll get back to you as soon as possible. And if you want to schedule the one-on-ones, go ahead and do that as well. But we also have the class sessions coming up, and I will be live every Tuesday for a fact. So thanks for tuning in, guys. I'll catch you later, and thanks for the questions. Have a good one.